Hi students, welcome to Sunil's tutorial. I am Sunil Nirvani and today we will be doing this chapter of finance called as internal reco. We are going to do question number 4 today. Illustration 4 in the books of Sunrise Limited. Let's start. Now, before we start, it's always advisable to write this on one corner of the page. That will make things simpler for you. LAAL debit credit. Let's start with the adjustments. They are saying that dividend on preference shares has not been declared for 2 years. No provision has been made for sales tax liability of 19,200. The following scheme of reconstruction has been approved by the court. Uncalled capital is to be called up in full. Right? Uncalled capital is to be called up in full. Let's look at this. If you look at your issued and subscribed capital, you have 80,000 equity shares of rupees 10 each, 7.5 called up. That means 2 rupees 50 paisa is yet to be called up. Right? Debit what comes in, money is coming in. Bank account debit to equity share capital account. Bank account debit to equity share capital account being final call received. Right? Now this is 2 rupees 50 paisa per share on 80,000 shares. Someone please calculate 2 rupees 50 paisa per share on 80,000 shares. 2 lakhs. Right? Next, let's move on ahead. So uncalled capital is to be called up. Equity shares are to be reduced to rupees 5 per share. Now each share is of 10 rupees. I am to reduce them to 5 rupees per share. Liability going down. Liability going down means capital reduction on the credit side. So this will be equity share capital account debit to capital reduction. Right? Now, how many shares I have? 80,000 shares. 5 rupees per share.
4 lakhs.
4 lakhs. Being equity shares reduced. Next. They've given you that sales tax liability of 18,000 has to be paid off immediately. Now on the liability side you do not have sales tax liability, right? It is to be paid, money is going out. If you do not have a word in the balance sheet, you do not use it in your journal, right? So I have to pay, money is on the credit side, so this will be capital reduction account debit, capital reduction account debit to bank. How much has to be paid? They are saying that the amount to be paid is 18,000. Yeah, 18,000 rupees. Being sales tax liability paid. Right? Next, let's move on ahead. Land and building are to be shown in balance sheet at full market value of 4,40,000 and goodwill is to be written off. Now land and building is 3,20,000. It is to be shown at 4,40,000. That means the value of asset is going up. Asset going up means capital reduction on the credit side. So this is going to be land and building account debit. Land and building account debit to capital reduction being land and building revalued. Right? Now it was 330, no, it was 320 and they are saying that you have to make it as 440, 120, 1,20,000. Next, they are saying that goodwill is to be written off, right? Now, goodwill written off, value of asset going down, so capital reduction account debit. Debit to goodwill. Now, guys, listen to this. Whether they specify or no, you always have to write off the fictitious assets. Now, if you look at your balance sheet, you have a profit and loss there on the asset side of the balance sheet. That is the fictitious asset. So, whether specified or no, that has to be written off. While doing internal reco, fictitious assets have to be written off. So, goodwill is 40,000 and P&L is 2,85,600. So that is 3,25,600 being assets written off. Next, trade creditors agreed to forego 25% of their dues on the condition that 25% of the net liability after remission is to be paid forthright and balance within 1 year. Who's going to be paid? Creditors. Debit the receiver. Creditors account debit. They are going to be paid. Money is going out to bank. They are going to forego. That means my liability is going to be reduced. I don't have to pay them. Liability reduced means capital reduction on the credit side. So to capital reduction account. Right? Now, what have they said? That trade creditors agree to forego 25% of their dues. Now, creditors as per balance sheet is 96,000. Someone please find out 25% of 96,000. 24,000. That means 24,000 they are going to forego, right? And on the condition that 25% of the net liability after remission. Now see, their claim was 96,000, out of which 24,000 has been written off. So how much is remaining now? 72,000. Someone please find 25% of 72. 18,000. So 25% of the net liability after remission means from 96,000 deduct 24,000 and what remains is your 25% of the net liability after remission, which is 18,000. Right? How much is this? 42,000. Being creditors paid. Next, investments are to be taken over by the bank in full settlement of the overdraft balance. Right? Now, debit the receiver. Overdraft is the receiver. So, bank overdraft account debit. Debit what comes in, credit what goes out. Investments are going out to investment account. Bank overdraft is 33,600. Investments as per balance sheet are 48,000. The difference is to be written as capital reduction account. $14,400 being OD paid. Right. Next, preference shareholders have agreed to sacrifice their rights for 2 years and accept 24 fully paid equity shares of ₹5 each for each fully paid preference shares. Preference shareholders have agreed to sacrifice their rights for 2 years dividend. That 2 years dividend is not there in the balance sheet. So if they are not taking it, we will not make an entry for it. The amount is not there in the balance sheet, we are not paying it, therefore there will be no entry for it. and accept 24 fully paid equity shares of 5 each for each preference share. Now let's see the working note for this. Preference equity. Accept 24 equity shares for each preference share. Now as per the balance sheet, there are 4,000 preference shares. So in that case, how many equity shares have to be issued? 96,000 equity shares have to be issued. Right? Debit what comes in? Preference shares are going to come in. So 9% preference share capital account debit. Leave a line. Debit what comes in, credit what goes out to equity share capital. Right? Now, preference share capital is 4 lakhs. Equity share capital, I have to issue 96,000 shares of 5 rupees each. 4,80,000. The difference is to be written as capital reduction. $80,000 being preference shares exchanged. Right? Okay. Now leave space for one journal entry. Leave space for one journal entry and make capital reduction account. Leave space for one journal entry and make capital reduction account. Capital reduction on the credit side. So you will make the entry on the credit side by equity shares. Amount is 4 lakhs. Capital reduction on the debit side. So you will make the entry on the debit side to bank 18,000. Capital reduction on the credit side by land and building 1,20,000. Capital reduction on the debit side to goodwill is 40,000 and to P&L is 2,85,600. Next, capital reduction on the credit side by creditors. Creditors is 24,000. Then capital reduction on the debit side to investments. 14,400. Then you have capital reduction on the debit side again to equity shares. Amount is 80,000. Right? Right. Let's tally this. Someone please help me tally this. 5 lakh.
44,000.
5 lakh.
44,000.
44,000. 5 lakh 44,000. Difference.
1 lakh 6,000.
1 lakh 6,000. So the difference is going to be 1 lakh 6,000. Okay, let's see this. Now, capital reserve is on the debit side, so in the journal it will go on the credit side. So this will be capital reduction account debit. To capital reserve. Amount is 1,06,000. right? Okay, this finishes this. Let's start with the balance sheet, guys.
The B.
Being capital reduction written off. Let's see this balance sheet. Liabilities, rupees, assets, rupees. Let's look at the old balance sheet. Authorized share capital. Authorized share capital. They've given you 1 lakh. You have equity share capital. Equity share capital is given to you as 16 lakhs. Then 9% preference share capital is given to you as 4 lakhs. So this comes to 20 lakhs. Right? Now let's start with issued and subscribed capital. Issued and subscribed capital. Under issued and subscribed capital, you will have equity share capital. Equity share capital is 6 lakhs. For liability, the rule is add credit, subtract debit. Right? On the credit side, 2 lakhs. 6 plus 2, 8. On the debit side, 4 lakhs. 8 minus 4 is 4. On the credit side, 4 lakh 80,000. So that is going to be 8 lakh 80,000. Right, that's equity share capital. Then you have 9% preference share capital. Preference share capital. 4 lakhs is given to you in the balance sheet. You have 4 lakhs on the debit side. 4 lakhs minus 4 lakh nil. Okay, next let's move on ahead. You have reserves and surplus. In reserves and surplus, you have capital reserve. We just found out capital reserve to be 1,06,000. Then you have okay, secured loans. Secured loans is nil. Unsecured loans. Unsecured loans is 1,60,000. Then you have current liabilities. Under current liabilities, you will have sundry creditors. Creditors is 96,000 and you have creditors on the debit side 42,000. 96 minus 42.
186.
Subtract 54.
Subtract?
It's on the debit side, right? Then you have bank OD. Bank OD was 33,600 and it is on the debit side 33,600, so nil. Next, let's move on to the asset side. Fixed assets. Goodwill. Goodwill is 40,000 and you have goodwill on the credit side. Nil. For assets, the rule is add debit, subtract credit. Land and building. Land and building is 3,20,000 and you have land and building on the debit side 1,20,000. So that will come to 4,40,000. Then you have plant and machinery. Plant and machinery is 2,40,000 and that's it. You don't have an entry with plant and machinery, so that remains as it is. Then you have investments. Now investments is 48,000 and you have investments on the credit side 48,000. So that is nil. Then you have current assets. Current assets is given to you stock same as it is 1,08,000. Then you have debtors 2,36,000. Then you have cash in hand, cash in bank, that is. Someone will have to check this. Cash in bank was 12,000 plus 2 lakhs minus 18,000 plus no. That's it. Huh? How much is this? Once again, how? अच्छा 1,76,000. चलो ठीक है. Right. Next, profit and loss.
main आएगा.
Profit and loss is 2,85,600 and you have it on the credit side, so this is going to be nil. Someone please check. How much?
12 lakhs.
Balance sheet tallies at 12 lakhs. Balance sheet tallies at 12 lakhs. This finishes the sum. We'll stop here for the day. Thank you very much.